Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Midweek blues, so to say, given the fact that the rupee has hit a fresh record low. In fact, it has also crossed that 90 handle as we speak. So yes, a record low opening for the rupee. The 90 to the dollar mark is here. We'll have to see whether the RBI intervenes or not. Earlier yesterday, when the rupee was in a free fall, there were reports that the RBI had intervened to, defend that 90 handle on the rupee. But at the open, we have, kind of breached that, 90 handle on the rupee. So that's a fresh record low. Remember, we have the RBI policy on Friday. So we'll see how, the governor really or how the MPC really decides about the interest rate decision. Today is when the MPC meeting begins, the 3-day MPC meeting. So yes, on the rupee front, currency continues to be, a cause of worry. We'll see whether or not it flows through to the equity market as well or not, because ever since we've hit a fresh record high on Monday, we have been facing pressure, and that's attributable to the weakness that we have seen on the rupee rates. So yes, that's one key monitorable, 90.1. That's the level on the rupee that I'm looking at on the screens. So in a free fall, that's the currency for you. We usually don't see such sharp moves on currency, but last few days, that has been the case. Even last week, once we saw the rupee tumbling quite a bit, almost 70-80 paisa at one go. That's something which doesn't really happen on a daily basis. But yes, that's one thing that all eyes will be on in today's session as well. So, in terms of the global markets rather, things are looking pretty okay. We saw a Wall Street rebound overnight. Asian markets are also largely in the green. Of course, there are hopes building of a Fed rate cut next week, a 25 basis point, 87% chances of that happening according to the Fed Watch tool. So that will also be a monitorable. But in terms of GIFT Nifty, we are poised for a muted open. That's what the GIFT Nifty is hinting at. I just want to see what the markets are doing in the pre-open. In the pre-open, we are below that 26,000 handle. Yesterday, we slipped below that 26,000 mark for a bit. 25,997, that was the low yesterday. Today, in the pre-open, I can see the Nifty is down around 60 points. So, currency jitters may pressure equities today as well. But we have some more time to go, 12 minutes or 11 odd minutes to go for the markets to open. Lots lined up, lots of stocks that we'll be watching out for. And mind you, a busy day on the primary market front. We have 3 IPOs opening today. We'll talk about that as well. All your stock related queries will also be in focus, so keep them coming in on our live feed. Before bringing on board our experts and kicking off the show, let's quickly take a look at the top stories at this hour. Wall Street stages a rebound to end the session higher following a tech-fueled recovery. Dow gains over 180 points while the Nasdaq adds nearly 140 points at close. Asian markets open largely higher, tracking gains from Wall Street. The GIFT Nifty, however, is indicating a lower start for the Indian market. Crude prices trade lower as traders monitor geopolitical developments in Venezuela and Ukraine and their potential impact on oil supply. Meanwhile, gold prices fall on the back of profit taking. It's IPOs galore in the primary market. E-commerce platform Meesho's 5,421 crore rupee issue opens today. It closes on the 5th of December. Price band has been set at 105 to 111 apiece. Also opening for subscription today is Aequs. Its 920 crore rupee IPO will open, and Vidya Wires 300 crore rupee IPO also kicks off for subscription today. RBI's 3-day monetary policy meeting begins today. The decision is to be announced on the 5th. Street is deeply divided on whether or not the central bank will cut rates this time around, or if they go for a pause. But of course, the rupee falling to a fresh record low, that's something that may also be a factor in terms of coming to a decision on interest rates. All right, those were the top stories. Cues for trade. The first big cue, of course, is the currency breaching that 90 mark vis-a-vis the dollar, that's something that could weigh in on sentiment as well. Yesterday we had expiry related volatility as well that played out, which is why we saw weakness, all round weakness in the market, although the broader end of the markets managed rather to fare better than benchmarks. But the pain point advance decline ratio continues to be skewed in favor of declines, and that's why portfolios weren't looking all that great either. In terms of the market movement, we ended lower for a third straight day. Mind you, this is a week where we are coming off record highs as well, but we've come off from those levels. In fact, 26,000 as well could be at risk in today's trading session. Stocks like Reliance, HDFC Bank, ICICI Bank, these were among the top drags on the index. The advance decline ratio was at 1:2, but the good part is that the volatility index, India VIX index, was also lower. That should be that should come as a reprieve. It signals that sentiment isn't all that bad, or volatility isn't all that great. Even though there are some factors which are at play when it comes to the weakness in the equity market. The Nifty Bank index was also a drag. It ended lower below that 59,300 mark as well. There's some weight changes happening on the Nifty Bank index, wherein HDFC Bank and ICICI Bank will see rate reduction, which is why we saw both the stocks coming under pressure. But two stocks that will be included on the Nifty Bank index are the likes of Yes Bank and Union Bank, and both of them managed to hold out even though the trend was on the downside. Asian Paints was another counter that was in focus, 3% uptick. In fact, all the paint stocks were gaining in trade yesterday after UBS came out with a positive report on Asian Paints. In fact, it upgraded the stock as well. So that saw paint makers perk up quite a bit. Maruti, of course, top gainers on the back of e-Vitara launch. Most capital market names were under pressure, the likes of HDFC, AMC, CAMS, etc. Pharma names like Glenmark, Dr. Reddy's continues to see buying. On the other hand, you had Spark that rose somewhere around 20% on the back of a favorable US court order on Sezaby. That's a medicine that's something that perked up stocks like Spark. And of course, in terms of IPO market, it remains hot. We have the much awaited Meesho IPO opening today. It has garnered strong demand from the anchor book. Aequs and Vidya Wires, these are some of the other IPOs that are opening. In terms of fund flows, foreign investors continue to pull out from the Indian markets. They have sold stocks worth 3,640 crore rupees in equities in the cash market yesterday. DI buying support continues. 4,650 crore worth of stocks bought in the cash market. In terms of the put call ratio, it climbed to 0.94 vis-a-vis 0.89 in the previous session. And if you're talking about stocks that will be in the F&O band, only one, and that has been in the F&O band for quite a few sessions now, Sammaan Capital, continues to remain in the futures and options band. But on that note, let's see whether we have a guest joining in or not. Ruchit Jain, Vice President Technical Research, Motilal Oswal Financial Services. Ruchit, lovely chatting with you. We managed to hit fresh highs earlier this week, but since then, currency, movement has really been pressuring equities. What is your sense? Do you see this as a short-term blip, or do you see a trend reversal for some time going forward? What is your take, and what is that crucial level that you will watch out for on the Nifty on the downside?
Yeah, hi, very good morning, Nandita. So, Nandita, if you see the broader trend for the markets, then Nifty has hit its all-time high recently yesterday itself. But what we have seen that the up move has been more led by only selective large cap stocks, where there is no participation from the broader markets. If you look at the small cap space, then that has been in that consolidation or a corrective phase in last couple of months. But yes, the large cap trend is still positive, and overall on the Nifty front also, in the recent correction, Nifty had formed a swing low of around 25,850. So that higher top, higher bottom structure remains intact till the 25,850 is not broken. So on the index front, we are positive. We believe that until we see any signs of trend reversal, this uptrend could continue going ahead, with in between consolidations that could be there. But definitely not much good signs for the broader markets. Even as you said, the USD INR, whenever INR depreciates, we usually do not see any buying interest coming in the broader markets. So depreciation of INR coupled with the FI selling, which we are witnessing, I think that will keep the momentum range bound or negative for the broader markets. So being stock specific or selective would be very key in such kind of markets, and focusing only on large cap names, I think should be the theme for now.
Okay, focusing only on the large cap themes should be the focus now, because the currency depreciation will ensure that the broader market participation doesn't happen just yet. But Ruchit, what about the Nifty Bank Index? We cleared that 60,000 mark quite decisively once, 60,100. But since then, we've come off quite a bit. 59,300 was taken out. Of course, there were some technical adjustments as well that would weigh in on the Nifty Bank Index, with the weights of ICICI Bank and HDFC Bank coming down. So here, what are the levels now? Would you expect a reclaim of 60,000 to be, to be far out right now? Would you expect some bit of pressure after the kind of up move the Nifty Bank Index has seen in recent times?
So in the recent uptrend, Nandita, if you see, then the banking space has taken the leadership and have shown a good relative outperformance in taking the markets higher. So the broader trend for banking index, or even if I add a few of the NBFC names, where the overall trend is still positive, that still remains intact. But yes, just because of that overbought momentum setups, recently we have already seen a good run up or a move in the Bank Nifty index or Nifty Financial Services index. So the momentum readings are a bit overbought. So that could get pulled off with either a small correction or some time-wise correction, which we call consolidations. So one should keep a buy and dip approach as well as Bank Nifty index course. The 20-day MA support is placed around 58,900. So 58,900 58,900 to 58,850 should act as a support, and then we can again see a resumption of the uptrend. But if you look from a bit medium-term perspective, then definitely in this up move, we expect the NBFCs and the banking space to continue the outperformance.
Okay, that's the view, a little bit in the overbought zone. So that's about it when it comes to the Nifty Bank Index. But just about 2 odd minutes to go for the markets to open. Any recommendations for our viewers, Ruchit?
Asian Paints is one stock within the large cap stocks that we like. Post the recent numbers, the stock has shown consistent buying interest. Yesterday also the stock again gave a breakout from a bullish flag pattern technically. So we expect an up move towards 3,080, 3,100 in the near term. So short-term traders can look for buying Asian Paints with stop loss below 2,900 for possible targets around 3,100.
Okay, that's the recommendation then. Okay, just about a few seconds to go for the markets to open. Just want to understand, let's talk about one stock that's been in focus ahead of the e-Vitara launch, that's Maruti. The stock, of course, has been in a steady uptrend. Look at the move from August 14, ever since the GST, rejig announcement by GST reform announcement by the PM. The stock has rallied somewhere around 25% or thereabouts. At these levels, would you be a buyer, because it's still some 300-400 away from 52-week highs? Do you see that bridge being crossed and Maruti testing those 52-week highs anytime soon?
Yes, I think gradually the stock should do well. Overall, not only for the stock, but for the sector as a whole, the trend still remains positive. 50 DMA for Maruti is placed around 15,700. So till that is intact,
right,
I think we should see a gradual up move in Maruti.
Sure. See a gradual up move in Maruti, but we're looking at a positive open this morning. The first ticks at least were positive, 10 point uptick on the Nifty, but now of course we've given up those initial gains. The Nifty is down 3-4 odd points right now, holding on to that 26,000 mark, but not such a bad start given the fact that currency weakness continues. Sensex right now trading in the positive zone, 25 to 30 points up. The mid cap index, however, it's kind of underperforming at the current juncture, down 0.2% or so. The advanced decline ratio at the current juncture is skewed in favor of gainers, but we'll have to wait for it to settle down to really call it a trend for the day. Mid cap index, of course, in fact, the benchmark indices have also now slipped into the red. The Bank Nifty, it started on a positive note, slim gains initially, but it has given up those gains, towing that 59,250 line at the current juncture. Let's take a look at some of the other sectors. I want to see what the export-oriented sectors like IT are doing. IT gaining in trade today, and so is Pharma. Both the sectors are among the gainers today. Only two sectors that are gaining at the current juncture. Not big gains, but 0.2% kind of gain on both the Nifty Pharma and IT index. PSU banking index that was holding out, in the first half of the session yesterday, succumbed to selling pressure in the second half. Right now, as we speak, the Nifty PSU bank index is the top laggard, followed by the FMCG index. You have metals as well not doing well, 0.2% kind of a downtick when it comes to the Nifty metal index. Autos also on the back foot. Banks we already took note of. Realty, it's not really been able to stage a comeback of sorts. Real estate, that pack is also down. So all in all, a mixed picture. Barring IT and pharma, all the other sectors are trading in the red. Let's take a look at some of the individual movers then. Dr. Reddy's, up 1.5%. Some Supreme Court judgment has come in on semaglutide. That seems to be boding well. The stock is up 1.5%. Infi, Wipro, TCS, these are among the top gainers on the index. M&M continues its upward move. That stock is up somewhere around 0.5%. Hindalco from the metal pack, there was a brokerage note on Hindalco. Positive view coming in, the stock is gaining. ICICI Bank has snapped. Both ICICI and HDFC Bank are in the positive. They were among the top drags yesterday. SBI also doing well. Sun Pharma, there's some news flow on Sun Pharma as well. That stock is also among the gainers. Eternal is another one that's doing well. And Reliance, after yesterday's down move, it has managed to stage a good comeback. What's not doing well? HUL, that's the top Nifty laggard, 1.5% down. Max Health, Shriram Finance, HDFC Life, Titan, Tata Motors, passenger vehicles, Nestle, Tata Consumer, some of these FMCG names, mix of some financials and some consumption names, other discretionary names like Titan under pressure. Even the likes of NTPC Coal India, these are among the laggards. By the way, it's fairly choppy for the market at the current juncture, because Nifty has, in fact, Sensex has managed to edge back into the green, up somewhere around 20 points or so, and so has the Bank Nifty. It's around that or above that 59,300 mark as we speak. How are you placed on some of these FMCG names, Ruchit? We have the quality demerger as well. So the record date for that, I think, is Friday. HUL, ahead of that, how are you trading into it? That stock is among the top laggards.
The sector as a whole has not done really well over last few months. We have seen that the broader markets have seen some consolidation, but there were many heavyweights, which has done well. But Nifty FMCG index has been an underperformer. Even on the index front, 55,800, which is the 200 EMA, till that is not taken out, we expect the FMCG space relatively to continue its down move. And even HUL, probably 2,500 to 2,380. This is the trading range where some consolidation could be seen in the short term.
Okay, that's about HUL. But let's shift focus to the pharma index as well. Some stocks that are seeing an uptrend, the likes of Dr. Reddy's. By the way, it was not the SC or Supreme Court, it was the Delhi High Court that has allowed Dr. Reddy's to export semaglutide. So I think that's one reason why the stock is doing well. This weight loss drug is being seen as a big opportunity for Indian drug makers, and this of course comes as a respite for Dr. Reddy's. That stock is up, and even Sun Pharma is in focus. Board has approved proposal to invest somewhere around 3,000 crore rupees to set up its formulations manufacturing unit in Madhya Pradesh. And pharma, some of the pharma names have been in focus, entire week, right? You have Wockhardt that saw a very good jump on Monday, and then it continued its up move yesterday as well. And we had Spark as well. So all these pharma names, anything that's featuring on your lists from the names that I mentioned?
Yes, overall, relatively, I think pharma can do well going ahead. We have already seen a decent consolidation phase over pharmaceutical space, and the risk reward ratio seems to be a bit favorable now. So price-wise downside for the pharma stocks seem to be limited. So within the entire pharma space, stocks such as Sun Pharma, Lupin, Granules, these are certain stocks which we believe that could see a good momentum going ahead if the entire pharma basket witness an up move. So Sun Pharma, Lupin and Granules, these are three names within the pharma space where one can look for buying opportunities.
Okay, that's about pharma. But some of the metal counters have also been hogging the limelight and shining bright. The likes of Hindustan Copper, Hindustan Zinc, silver, copper prices hitting record highs, and these stocks have also been hitting 52-week highs. In fact, Hindustan Copper is in focus this morning as well. It's executed its MOU with NTPC Mining to collaborate on copper and critical minerals project. The stock is up somewhere around 0.5% today, but the stock has been in an uptrend, so to say, and so has been Hindustan Zinc. What do you like between the two names?
I think Hind Copper can do well. National Aluminium is one stock which overall within the metal space look good. Even Hindustan Zinc has recently given a breakout from its falling channel. So metals, we have seen a good up move in the base metal prices again in last few trading sessions. And over here also, I think certain stocks such as Hind Copper, Hindustan Zinc, and even National Aluminium can see further price up moves from current levels.
Okay, that's about metals. But let's talk about cement as well. India Cements, it is aiming to sell its entire equity in an Indonesian arm for 5.4 crore rupees. In terms of cement, numbers wise, it has outperformed. Any particular stock that you will be tilting towards within the large cap basket, or do you think the mid cap ones warrant a look? How are you looking at India Cements, ACC, Ambuja, Ultratech, anything that is catching your fancy? Because India Cement, I'm seeing the charts, it has been in a downtrend if you look at the last 1 month or so. Good opportunity, or, look at the bigger names?
So I think no, I would keep a wait and watch approach as far as at least mid cap cement is concerned, because we have not seen that kind of outperformance coming in from the sector as a whole over last few months. And even Ultratech cement within the large cap space is one stock where I think only from a longer term perspective one can look for buying at current levels. From a trading perspective, we have not seen any kind of positivity in any of the cement names. So I think it's better to keep an wait and watch approach and avoid any trading opportunities as far as cement space is concerned. Ultratech is one name which on a longer term charts, I think this correction should be used as a buying opportunity.
Okay, that's the view. Mid cap wait and watch, but Ultratech you can perhaps go and buy on dips. Let's shift focus on our viewer queries then. Lots of them. Let's try and get as many addressed as possible. First query on a Yes Bank, and I'm asking you this query because the stock has been in focus. Of course, it will be included in the Nifty Bank Index as well, and yesterday it saw good traction despite the fact that the broader market was down, Nifty Bank was down, but this stock managed to hold up. Query from Naveen whether a fresh entry is warranted at the current juncture. Stock is closer to 52-week highs. Is it a good time?
Well, I don't think so that no, we would see any kind of big up moves in Yes Bank anytime, at least in the near term. Overall, the stock has been in a consolidation phase post the recent up move, but on the high side, 24 remains a very crucial resistance. So until we see any breakout about 24, 24 and a half supported by good volumes, we think that this consolidation could continue. So within the entire banking space, certain mid-sized private banks, we can see stocks such as Federal Bank is there, City Union Bank is there, IDFC First Bank is there. Recently, in the up move when the markets rallied higher, these stocks showed good relative strength. The price up moves are supported by good volumes. Definitely, there has already been a good run up over there. But in case of any kind of dips in the banking space, I think you should focus more on the mid-sized private sector banks such as Federal Bank, where the longer-term trend is still very strong. And on any dips, you can look for buying opportunities there.
Okay, so you have better names within the mid-cap banking universe, Federal Bank being one of them. I hope that answers your query. There's another query that's coming in on an HDFC AMC. This one's coming in from Preeti Singh. Wants to know whether she can take fresh entry at the current levels with a 3-month time horizon. HDFC AMC, the stock has done well on a 6-month basis, but I think last 3 months and 1 month, it has cooled off slightly. But this morning we have a positive brokerage note on HDFC AMC from Citi. They have upgraded the stock to neutral from sell, and the target price is at 2,850 rupees per share. Would you look at this stock within the capital market play basket, or would you look at other names from the exchanges, or other end or other stocks within this basket? how would you approach this entire space, and what would you advise Preeti to do?
So, Nandita, overall capital market as a theme, I think still from a mid to long term perspective, overall trend remains positive. But no, on HDFC AMC, I think if one has to do any kind of bottom fishing, should review when the stock comes around 25.50, 25.40. That's where the 200 DMA, the long term support for the stock is placed. So that would be good levels where the risk reward ratio would be a bit favorable. So take a review again those levels. Apart from that, I think from a midterm perspective, CDS stocks such as CDSL, where we have already seen a good price-wise correction, and the stock is more into a consolidation phase or a time-wise correction, can be seen as a good accumulation over here. So definitely, the momentum is not there from a very near-term perspective. But in case if one wants to keep buy and hold approach, then stocks such as CDSL can also be bought.
Okay, that's the view. I hope that answers your query. But let's shift focus and get in a query on Olectra Green Tech. Pooja has written in, wants to know what to do. She holds Olectra shares at the rate of 1350, wants to know if it's a good time to average. Would you advise that?
Well, the short-term trend is not positive yet, so I won't recommend advising at current levels. Major, if you look at the previous swing low for the stock in the month of April, May was somewhere in the range of 1150 to 1100. So if the stock comes there and forms any kind of reversal patterns or signs of reverse trend reversals come over the previous swing lows, then that would be a good idea to do averaging at those levels.
Okay, the short term trend isn't looking all that encouraging. I hope that answers your query. There was a query on JSW Energy from Prashant, I think, wants to know your thoughts on this stock. The trend on the stock has been, on the downside. Look at any time frame, 1 month, 3 months, 6 months. In fact, on a YTD basis, it's down over 20%, stuck in a downtrend. Is it going to find its floor yet, or is there more downside, and should one really catch this falling knife?
No, I think one should just stay away and keep a wait and watch approach. The stock made its all-time high around 800 rupees in September 2024, almost 1 year and 2 months. But the stock has not seen any kind of up moves or pullback moves post that. So whatever pullback moves are also coming, we are not witnessing volume-based buying happening over there. So I think still the short-term trend still continues to remain down. Maybe around 400, 440, that would be the range where major support for the stock would come in. So until we see any kind of bottom out formation happening over there, better to not to do bottom fishing in such underperforming day.
And what about JSW Infrastructure? There's a query on that from Geetu Sandesh as well. Here as well, the trend has been on the downside. So would you advise staying away from this counter as well?
Yes, I think here also the short-term trend seems downside. Recently, the stock has been forming that low top, low bottom structure. Prices have breached their 50 and 200 EMA and are comfortably trading below those levels. So overall trend remains negative for JSW Infra as well. Major support, if I look at the bit mid to long-term chart, that then comes around 250 to 40 range. So 250 to 240 could be the range where risk reward ratio could become favorable if we see any reversals there.
Okay, that's the view on JSW Infrastructure. Hope that answers your query. There's a query that has come in on an Indigo from Reshmi and wants to know whether to hold position, whether there are chances of an up move from here or not. She wants to know your views on that. The stock has seen a reversal of sorts. Recent news flow hasn't been all that positive. Of course, the stock has been included in the Nifty 50 recently, but the stock is on the trending on the downside these days. In the last few days, we saw it emerging as or among the top Nifty laggards. What is your thought? Do you think it has the trend has reversed on this stock, or do you think it's a short-term blip and it's a good time to get into it? And if one is holding it, should they keep holding on? How are you looking at the stock of an Indigo, and what are the charts saying?
So it seems more of a consolidation or a time-wise correction within an uptrend only. The longer-term trend is not changed, but definitely in the shorter term, the stock is seeing some consolidation over last couple of months. 5976,000 is the immediate resistance, but on the low side, 5500 is a very strong support base for the stock where recent swing lows are seen. So maybe 5500 to 6000, this is the trading range where it could continue to consolidate. And once we see a breakout above 6000, then we would see a resumption of that. But if I look at this entire consolidation from on a weekly or the monthly chart, then the long term trend is not negative. So I would recommend to hold on the existing positions, but just you have to keep some mid to long term view. Then you could expect good returns again once this consolidation is over in Indigo.
Okay, that's about Indigo. Hope that answers your query. With that, we've come to the end of the query segment. If you couldn't take up your queries, please don't worry. Keep them coming in tomorrow. We will get them addressed. But with that, Ruchit, would like to thank you for taking out time and joining in this morning. Always a pleasure, and hope to chat again sometime soon.
Thank you, Nandita.
Thanks a lot. Well, with that, quickly take a look at the market texture before we bring on board our next guest. The Nifty has now slipped below that 26,000 mark. It's a 60-point cut. Sensex down, 150 below that 85,000 mark as well as we speak. The mid-cap index moving in tandem with the benchmarks. Advanced decline ratio has now, turned in favor of the laggards. 2:3, that's the NSE advanced decline ratio, and of course the currency deserves mention. It has made a record low of 90.14 in today's session. Of course, now it has pulled back to 89.98. Seems like, of course, there has to be some kind of intervention at those elevated levels, but rupee weakness, of course, weighing in on equities this morning, as well as has been the case all throughout the week. But let's bring on board our next guest then. Joining me right now is Sachin Jasuja, Head of Equities and Founding Partner at Centricity WealthTech. Sachin, lovely chatting with you. Welcome to the show. It's the first time we are interacting. Before we talk about themes and, what would work in this market, I want to get in your perspective on the broader trend. On the benchmark level, we hit a fresh record high. But since then, there has been a trend reversal of sorts, given the fact that quite a few factors at play, rupee being the big one. We have seen persistent FI outflows as well. One can't really say with certainty whether RBI will cut rates. The street is deeply divided. What's your sense? Because there seems to be a lack of conviction as the broader markets have not participated, and looks like the rupee weakness will keep the broader market from participating at the juncture. How are you looking at all the data surrounding the economy and what's happening with the markets? What is your sense right now?
Thank you, Nandita. Thank you for having me. So markets, if we evaluate markets on last 2 years basis, so we have always been slightly on the expensive side in terms of valuations. We have seen the frothy valuations on the mid cap, small cap, on the broader market side also, right? But last 6 months, 9 months, we have seen that froth is now gone. So on a relative basis, also on the valuation side, where when we compared with China or US, there was a point when China was trading at 8 to 10 price earning ratio. US Nasdaq was trading at around 20, but now Nasdaq has graduated to more than 25. China has come up, to 15 to 16 kind of multiple, and in India, there have been stagnation in last 1 year. So that relative premium is not as much as it was, right? So I think that was a cause of concern for global investors also. And there was anti-AI play also in India, that we could not find a single company or 2-3 companies which were playing that hardware kind of role on the AI side. So I think those were the reasons that now the valuations are now fine, the earnings are picking up. So if you look at the trend as of now, so I think relatively we have been expensive. We will remain at slightly premium, and now the gap is slightly bridged. So we feel that from here on, as the earnings are kicking up, the GDP growth numbers are coming up again. Slight concern on the nominal side, but yes, RBI will take care of it, I guess. And going forward, we feel that from these levels, we may outperform the global indices also.
So when you say RBI will take care of it, do you expect rate cut to come by on Friday?
Yeah, so when you dig deep into the numbers of GDP, which just came right at 8.2% real GDP, and the nominal was at around 8.7% because of the low inflation in that particular time. And RBI has been signaling that they wanted to. I mean, there was a time when inflation was in double digit, right? 7 8 years back, and now slowly the target of 4% met by consistent efforts by RBI, and now it is way below that 4%. We are in the zone of 2% now on a annualized basis. So I think RBI has got the room to decrease the rate. So whether this time or maybe the next time, but now when they look at the numbers, when after the GST cut, also government will not be able to spend a lot this year on the public capex side. Looking at that picture, I think RBI will be keen or will have some room and can show the inclination for further growth. And RBI has been his signaling that they are very pro growth. We have seen the CRR cut, many rate cuts, and I think somehow they will manage the nominal side of GDP also.
Okay, got your point. So, growth, you mentioned about government capex. Of course, it is expected to slow down in the second half. But at the same time, do you expect private capex to pick up, at least if a rate cut comes by this Friday?
Absolutely. I mean, even if rate cut comes or even if it doesn't come, though we see high probability that it should come. But see, public capex have done the heavy lifting as of now in this year. Almost 40% is already spent. Overall, on the capex side, 53% numbers are achieved. And now it is a time when our interest rates are lower, the GST cut has come in. So, private investment has to come in to bring the growth, and all the macro environment are in favor of that the private companies will open more factories. Already we see in this number that manufacturing has shown almost 9% kind of growth. So we were like from agri to skip to directly to services sector, and now from last 5 7 years have been investing a lot into the manufacturing segment. So we have already seen a lot of green shoots in the companies where they are opening up more factories, building up their more capacities. So going forward also we'll see that trend continuing, and from here we can see good pickup on the private investments also.
All right. Just want to get in your thoughts on what really happens to the currency trajectory here on. We made a record low of 90.14. Of course, since then we've seen the rupee again edge back below 90. I'm sure there would be some action from RBI on that front. But of course, the rupee has been the worst Asian currency thus far in 2025. Do you expect that weakness to spill over in 2026, especially if there is there's no concrete deal with US till the time a deal with US comes by, because government officials have been hinting that it will come by in 2025 itself. Would that be or would that give some kind of reprieve to rupee? What is your sense?
Absolutely. I think, Nandita, lack of trade tariff deal is one of the cause and one of the reason why the rupee is depreciating so much, because of the sentiments also. Even though the growth numbers were good on the GDP side, we saw that the trade deficit touched all-time high in October, $41 billion, right? And otherwise, overall, our balance sheet of India is very, very strong. But on the trade deficit, there were concerns. Specifically, we also saw in the solar cell side, solar module manufacturing side, the export declined a big time to the US. Overall impact, we saw that the US trade deal didn't have on the overall GDP numbers, not more much, maybe 30 40 bips point, but that was counter taken by GST cut. But overall, you are right. I think in the near term, maybe just as a technical level, you may see that 90 to 91 kind of level. It may be there. Some spillover can happen in FY26. But again, there is a high probability that some deal will happen. It will be some relief from the dollar's perspective. And one more reason, we have seen that FII have been pulling out money from India in last 1 year, because the relative valuations outside India was very, very attractive, and outside lot of money was going into the AI theme also. So that may even get reversed also. So I'm very hopeful that maybe for near term it may show 90 91 kind of levels, but again it should come back in that zone of 80 to 89 in the medium term. If that trend reversal happens, the money again comes to the utility or the value assets. And again, I think we have seen how the PE exit happened in this IPO, recently. So they are making a lot of money in India. I think the money will again come in many forms. Yes.
Hmm. Sure, got your point. Let's talk about some emerging themes then. For going into 2026, would you be more tilted towards manufacturing, capital goods, defense? Because we spoke about how you expect private capex to pick up in the second half. So, would you position yourself, or should one position themselves for a recovery in private capex? And in that sense, should one look at the manufacturing space and prefer that space over consumption?
Definitely, Nandita. Basically, that thing is happening from last 2 years. If you look at even in the Q2 numbers, GDP numbers, the manufacturing has grown by 9%. And if we see that, okay, the India, which is $4 trillion economy, can become 25 trillion dollar economy in 15 years, in 15 20 years. So in that zone, when we are going by 6x in the Indian GDP terms, I think the manufacturing has to go by 12x, 13x, right? Otherwise, the job creation, the sustainability of growth will not be there. And India has been spending on the manufacturing. So we have been pro manufacturing. Our weightage is good in that sector. Specifically, I think we have already done a very good job on the electronics manufacturing. When you see the likes of companies like Dixon, CG Power, on the defense side, we have seen Zen Technologies, and there are many other companies which are coming up into smart metering. So one segment is electronics, the other segment is, you can say, defense, where they are building up some equipments over there, or for aerospace or railways. So I think that manufacturing theme is already growing at a higher pace as compared to the nominal GDP from last 2 years, and I think that the trend will continue. A lot more money from the public side also, on the private side also. Private investment specifically, we feel that a lot of companies are building up their capacities, and they will continue to build up their capacities over there.
Sure, got your point. What about renewable energy? The government is temporarily easing the pace of renewable energy auctions due to grid absorption limits. Do you see this as a short-term corrective step, or would this be a potential dampener for the sector's momentum? What are your thoughts on that front?
So I think that is the reason we have seen some correction, solar stock specifically. But if you actually see that how we have grown from just like nothing, we have already built up almost 125, 130 gigawatt capacity on the renewable side, which will become 250. But due to the grid, absorption losses, that is a concern, and I think a lot of work is already being done over there. The government has shown intention over there. So you must have heard the battery energy storage system move also, where all the technology is coming from China, but India has started building up this technology, and companies like Vari Energy, Adani Greens, I think they are working on that, so that the grid blackout should never happen, and the absorption level should go higher. The losses will be minimal. So I think that technology is already building up. By that, it builds up. I think there is some moderation in the growth which we have seen in last 4 5 years. We have seen massive growth. So I can name many companies where the capacity was just maybe 10 20 megawatt, and they have grown to gigawatts, like in last 3 4 years only. So they have grown by 50x, 100x. So I think some moderation of growth will happen. But having said that, our demand is big. Solar or other renewable sources like hydrogen or even nuclear, the government is proposing in this winter bill that it will be open to the private space also. So I think there is a lot of demand of energy. As we see, the data consumption or the power consumption will go up only, and we will be focusing on the green energy side. So that mega trend will not go down. But yes, in between for 1 or 2 years, we may see
Okay.
some moderation in the growth.
Okay, got your point. In between, for 1 or 2 years, we could see some moderation, but the mega trend remains intact. Now, last question really, what about the fintech revolution in India? It has evolved from just building apps to building financial habits as well. Now, with such deep digital penetration and a crowded, fast changing space, how are you evaluating fintech opportunities from an equity investment lens, Sachin?
So, I mean, we really like that field, and we believe that, I mean, how to play India consumerism. If you want to play India, the big demographics, 1.4 billion people, and how can you play that? I mean, financial is something which is a big theme. So fintech is something which can play this consumerism, and you can play it through financial. So whether you say on the lending side, on the asset management side, or even the companies like Pine Labs, Paytm, Grow. So we were going through the numbers. So the SIP penetration, which the last month happened. So we attract almost $3 billion SIP every month, SIP, systematic investment plan. So more than 40% happened through Grow, right? So when there are few fintech companies who are attracting the new age investments towards themselves, and that is the future of India, right? So you cannot ignore that segment. So overall, we are believer that fintech will play a very very big role. It is all financials are already 30-40% of the market. So in that way, the things are transitioning. Some companies will be able to keep up with the technology, but yes, the new names like Zerodha, Grow, Pine Labs, these kind of companies on the payment side also, on the asset management side also, on the distribution side also, I think these companies will continue to grow at a much faster rate as compared to the old names.
Right, but you spoke about some of these payment side stories, but what about the rest of the consumer tech IPOs that have hit the market recently? Are you comfortable with the valuations they are commanding, given the fact that most of them have either just turned profitable or will turn profitable sometime later in the future? The profitability path is a little hazy for some of them at least. So how would you evaluate them?
Yeah, so see, even when 2 to 3 years back, Zomato came in, then Swiggy came in. So at that time of IPO timing, these companies are burning cash, right? Then later, Zomato became profitable. But now I think the quality of earnings have gone up for even these startups, because SEBI is scrutinizing until unless you become the EBITDA profitable, you become the cash positive. It's not easy to get listed in the Indian market. So when you evaluate these kind of names, like we have seen, Lenskart or other companies also, so we may see the non-linearity of profit. Reason being, they have achieved at a certain number of sales, like Lenskart, they are at around 6,000 crore revenue per annum, right? So they hardly became profitable last year. But now with any incremental sales growth of 20-30% kind of a sales growth year on year, their profit may grow by more than 50% by year on year. And they are already market leader in geographies like Singapore. So what they achieved in last 5 years, right? The old traditional companies could not grow in last 15 years. So from that angle, I think in the when you look at the valuation in context of the growth, you still would like to bet on these companies. Of course, these valuations are not cheap or attractive. Either they are fully priced or maybe slightly expensive, but Indian risk capital has gone up, so they want to bet on the companies which may promise you a superlative growth in coming years. So I think these kind of companies will continue to grow at a faster rate and will continue to attract money also, whether on the private side, on the public side also. So you have seen many mutual funds have shown, taken interest into companies like Lenskart, even though the valuations were slightly expensive, but still they don't want to miss the bus. Like they have missed it, some of the funds in the, 2 to 3 years back when these kind of startups came for the listing.
Okay, got your point. A positive view on some of the recently listed consumer tech names. With that, Sachin, would like to thank you for taking out time and joining in. It was a pleasure interacting, and I look forward to having you more often on our show in the morning.
Yes, definitely. Thank you. Thank you, Nandita, for sure.
Thanks a lot. Thanks a lot. Okay, let's look at the texture of the market. It's not looking pretty. We have taken out the 25,950 mark. In fact, at one point in time, we were down by over 100 points. The swing low for the Nifty has now shifted to, I think, 25,921. That's the low we made, intraday low we made. Of course, much of it has to be attributed to the currency movement. It's back now at that 90 level, 90.06. That's where the currency is at. The record low is 90.14. So yes, that's one pain point. Of course, continued FII outflows, no concrete deal with US yet. These are just some of the factors that are contributing to the weakness in the rupee. But some of these export-oriented sectors are holding out, in the wake of the rupee weakness, and they are the likes of the Nifty IT and the Nifty Pharma pack. Even the Nifty real estate basket has now edged back into the green, marginally so, but still barring the Nifty IT and real estate index, all the other sectors are deep in the red, not deep in the red, they are in the red, and they are being the laggards are being led by the Nifty PSU Bank Index, that's down 1.5%. Some bit of profit taking there as we speak. In terms of the individual movers, the list of gainers has shrunk even further. Just 4 gainers on the Nifty: TCS, Wipro, Dr. Reddy's, and ICICI Bank. Barring that, all the other stocks on the Nifty 50 are trading in the red. Shriram Finance, that's topping the laggards list at the current juncture, down almost 3%. Max Healthcare, that's down 1.5%. In fact, for the week, thus far, week to date, Max Healthcare is down almost 6%. HUL is the other one, Nestle, Tata Consumer. So all these FMCG names are under pressure. Among the top 6 Nifty gainers, HUL, Nestle, Tata Consumer, NTPC, Coal India are also among the laggards. So yes, not looking all that great. We are 100 down on the Nifty. Advance decline ratio has worsened even further. That's 1:2. The breadth remains very weak, and mid cap index now down 0.5%, underperforming the benchmark indices as well. Well, on that note, we are timed out on this edition of Opening Bell. Of course, we had 3 new IPOs opening for subscription today, and we'll be getting you an exclusive interaction with one of them, the biggest one of them, Meesho, at 11 a.m. You can't afford to miss that. So tune in live at 11 a.m. with the management of Meesho. Thanks a lot for watching from the entire team. Stay tuned to Money Control for all your other news and updates, and have a great day.